All right, welcome back to Yahoo Finance. Busy day down at the New York Stock Exchange for Restaurant Brands. Of course, that is the company owns Burger King and many other chains. And I should have mentioned Tim Hortons as well. Let's bring in the two stars of the hour down here. That's Executive Chairman Patrick Doyle and Josh Kobza, the CEO of Restaurant Brands. Good to see you both. Pretty packed house turnout, right, upstairs here. What did investors want to hear from you, Patrick?
They want to hear about our future plans. So what we laid out today was our long-term growth algorithm for the business, what we think we can achieve across the 4 brands, our 5 business segments, and hopefully they're excited about it.
Do you think they're excited about it?
I think people are pretty excited about the outlook. We just announced our earnings a couple days ago, and I think we've made tremendous progress on sales, and perhaps most importantly on franchisee profitability. Across all of our home markets, our franchisee profitability was up over 30% in the last year, and I think that's the underpinning of our future growth. If our franchisees are doing well, we're operating our brands well, we're going to grow all around the world, and that's what has us and our investors excited.
Patrick, how does this dynamic work? Executive Chairman, CEO, you passed your 1-year mark. So how does this work? Like, is it coaching? I mean, how do you work in close concert?
He does all the work.
He does all the work.
I just lob
that
in
sounds like
ideas.
Executive Chairman.
I just lob in ideas. He does all the hard work.
Does all the hard work. One thing that stood out to me, reported earnings earlier this week, Josh, there seems to be a turnaround happening in Burger King US. Now, I know this has been a long undertaking to get down to this path, but why do you think the brand is in fact starting to turn?
Yeah, so I think Tom Curtis, who runs the Burger King business in the US and Canada, and the rest of his team have done an incredible job. They put in place the Reclaim the Flame plan just about 18 months ago, and we're making big investments in the brand, in the infrastructure, alongside our franchisees. Those investments are really starting to show results. We saw big improvements in sales. We had our first quarter of positive traffic. We saw operations improve, and our franchisees' profits were actually up about 50% year on year. So all those things are sort of moving in the right direction and reinforcing each other. Tom calls it progress, not success. I think we have a long and bright future for Burger King, and we're going to keep at it.
What is the driver between that franchisee profitability? Now, I talked to a lot of folks ahead of this interview on the street, and they all pointed out higher profits for those franchisees. It took a lot of folks by surprise. Can you point to, is it better menu items? Is it better operations, or have costs just come down?
Yeah, I think the biggest driver is the sales growth. That makes everything easier in our business. And the good news is our sales were up really healthy levels over the past year. That's what's allowed us to drive improved profits alongside some moderating costs. The great news about that is that that's what allows our franchisees to reinvest in the business. It allows them to staff the businesses better. It allows us to upgrade technology and equipment, and ultimately to remodel and improve our assets. Those are the things that kind of kick the flywheel in the right direction and allow us to keep improving the business.
A lot of focus, Patrick, made a big bet on Carroll's in the process of acquiring that business. We'll get to have a lot more restaurants in the chain. What will that let you do in terms of bringing the business to the next level?
Yeah, there are really a couple reasons why we did it. And so ultimately, Carroll's is a very good operator of Burger Kings. They also own some Popeyes as well. They're very good operators. They've got great people in there who know how to run the restaurants. So what we're doing is we're going to buy Carroll's. It's still a pending acquisition. We are going to re-image all those stores. So 600 out of the 1,000, we're going to remodel, make them look great. And then we're going to give opportunities to the people within Carroll's who are strong operators to become franchisees. Some of them we may sell to some existing franchisees. But the idea is we'll have great looking restaurants. We'll accelerate the progress there, and then we'll split them up into a lot of local owner operators who we think are going to do an even better job of running them over the long term.
Our first conversation, Patrick, was in 2014. I was at a different publication. You were the CEO of Domino's, but you turned around Domino's. Can you point to some similarities with Restaurant Brands? Where is this company in its turnaround?
I didn't turn around Domino's. A lot of people there did amazing work, including Russell, who's still running it. But the basics work in this business. I mean, it's what gives me confidence. If you're making great food consistently, if you're giving people good value, if you're giving them fast, friendly service, the restaurants look great, you're going to be successful. Everybody knows that. The issue is, do you do it? Do you actually wake up in the morning and say, that is the minimum that is acceptable for us in our brands? And when you do that consistently, you're actually going to be better than most out there, and that's going to generate growth.
And I should know it. You put your money where your mouth is. We talked about it. You have $30 million, or what, 5 years? Over 5 years. Are you putting more money in? Are you that remain a big believer in the brand?
No, so I locked up, so
Locked up.
I cannot sell anything for 5 years. I am all in. I look at it as a terrific opportunity from an investment standpoint, but also I'm excited to help Josh and the whole team to kind of figure out how do you do this? What are the places that maybe digital can be brought to bear to accelerate the growth, to generate better profits for the franchisees? I'm very excited about the progress we're making, and even more excited about what we can do, over the course of the next 5 years.
Josh, I'll tell you this, I'm still remain obsessed with reading earnings calls. Now, one of your competitors, Wendy's, came out this morning and said, we're investing $50 million more into breakfast. And maybe that's going to lead to more discounting in the breakfast category. How do you respond? Because that's a lot of money by a key competitor.
Yeah, so what I think we need to be focused on is really our core business, and that's what you've seen us doing. Whether that was at Tim Hortons, focusing on improving the quality of our core and investing to tell people about that in Canada a few years ago, or what we're doing now with Burger King. We're focusing on our core equities. Flame grilling, the Whopper, have it your way. We're putting all of our money behind the core. I think that's the best way and the strongest way to take these businesses forward. And so that's where we're going to put our investment, and I think that's what's paying dividends so far.
Real quickly, favorite item on the menu?
Probably the Popeyes chicken sandwich from Popeyes. Burger King has to be a Whopper. I love the Tim Hortons cold brew, and Firehouse hook and ladder.
Don't tell me Whopper.
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 Cheese.
Fair enough. All right.
Spicy chicken sandwich at Popeyes, although the new wings are amazing.
All right, you still got it, Patrick. All right, Patrick Doyle, always good to see you. Josh Kobza, good to see you in person. All right, Julie, Josh, back to you. Hope you're hungry.